Okay, we're on. Oh man, what a turnout. Thanks everyone for making it. We are packed today. So we'll be talking about predominantly growth on Bitcoin, and we'll be focusing on the on-chain part of it. I'll start by introducing myself, and then I'll hand it over to our guests. So my name is Stepan. I represent GoBTC Foundation. We've only just launched. We are a vertically integrated foundation that works with L1 and L2 Bitcoin projects at all stages of their development. And the idea is to facilitate and boost on-chain growth in Bitcoin and, in turn, the transaction volume. Right, shill time's over. Stefan, do you want to take it?
Sure. So, yeah, my name's Stephan Livera. I'm most known for my Bitcoin-focused podcast where I interview people and we cover technology and economics of Bitcoin. The show's been going since, 2018, but I've been, hodling and talking about Bitcoin since 2013. But, yeah, mainly focused on technology and economics of Bitcoin.
Hi, everyone. I'm Dan Held, currently general partner at Asymmetric. We invest in Bitcoin DeFi, that's ordinals, L2s, meta protocols. Before this, I used to lead marketing at Kraken from 2019 through 2022, and before that was in the space since building products and since about 2012. So that's my background.
Hi, I'm Jeremy. I'm the CBDO at GoMining. We are Bitcoin miners since 2017. 2021, we built the GoMining platform, which allows users to mine Bitcoin by owning digital miners. In essence, you own a digital miner with a certain amount of hash power that allows you to mine Bitcoin the same that you would if you had your own data center. We currently have 9 data centers, 350 megawatts of power on the platform. We've just reached over 2.5 million registered users. So, yeah, happy to be here.
Thank you. So as we were prepping for this panel, a very interesting point came up. So we were talking about on-chain growth on Bitcoin, and a question came up. I don't remember if it was you, Stefan, or Dan, but basically, do we count hodling Bitcoin as using it? So I wanted to start with that and then move on to the purely on-chain part of the discussion. Stefan, do you want to start?
Yeah, I think probably Dan and I probably have similar views on this, but essentially it's one of those things that people have been discussing back and forth, and sometimes the metric comes up and people say, oh, look, not that many people are actually transacting with Bitcoin. But then you have to also remember, to the question, is hodling also using? And I would argue, yeah, it is. I could even make the argument that actually most of the coins have not moved. If you look at those hodl waves statistics from Unchained Capital and things like this, you might see that most, 60% of the coins or 70% of the coins have not moved in 6 months or more. So I could actually make the argument to you that hodling is actually the most common use of Bitcoin. And so I think it's important just to understand that, because sometimes transaction metrics, when we focus on those, we sort of forget there's actually this big group of people who are using Bitcoin. They treat it like their long-term store of value. Now, of course, there's other ways you can use Bitcoin. I like to use Bitcoin when if I can transactionally, but I consider, most of my coins are being hodled. I save them. So I think it's an important thing just to understand, because it can cause us to make errors if we sort of say, oh, look, see, there's not that many people buying things with Bitcoin. It could be because they're using Bitcoin for something else. They want to save with it. They want to hodl with it. So those are just a few examples.
Yeah, plus one, Stefan's thought here. No one would ever question if you're using gold if you're holding gold. If I store gold in my vault, I'm fucking using gold. Like, it's not controversial. This shouldn't be a mind-blowing sort of revelation. So I feel like people weirdly associate Bitcoin only in its utility only being in merchant payments, which I think is a gross mischaracterization of Bitcoin's utility due to really bad narratives, starting with Bitcoin's earliest days from 2013, people really pushing the payments narrative. This led to a huge disillusionment and ultimately a civil war with Bitcoin Cash, where people thought Bitcoin is useful that way, when in reality, a vast majority of people use Bitcoin and they store value, and that's how they use Bitcoin. So Again, no one would ever question you using gold if you stored value in gold. And similarly with Bitcoin, I think that's the majority of its use.
Yeah, I'll just add to that. Of course, I look at hodling Bitcoin as one of the major use cases of Bitcoin and as the network. As we see, Bitcoin is being more and more considered being the best store of value that there is. A true asset that you can save in, that you can hold for the long term. And with that, I see that going in the future, and I think we'll all here be in agreement with this, that the value of Bitcoin is going to continue to go up over time as more people come on and see that store of value play when it comes to Bitcoin, but also as every fiat currency in the world continues to inflate itself into oblivion. Bitcoin is going to continue to just become stronger and stronger and stronger in that way. Yeah.
So speaking of Bitcoin's utility, there's a horrifying stat that I came across as I was prepping. So I think it was Outlier Ventures that shared the report stating that less than 1% of all Bitcoin is locked in dApps. That report came out in October 23, so I believe a lot has changed since then, but I don't think the percentage has grown a lot since then. Dan, as someone who's been focused on the ecosystem for quite a while now, I know you're mostly in DeFi. Let's start with your perspective and then move on to others.
Yeah, for sure. I think that stat is probably accurate. There's not a lot of dApps. First of all, on the Bitcoin base layer, there's very few. For example, I would consider coin joins using Join Market to be a dApp. I would consider Lightning channels opening and closing to be a dApp in a way. And then also I would consider Liquidium or other companies or protocols that use discrete log contracts. So I think there's very little locked up on Bitcoin L1 due to just the nascency, like how nascent the DeFi activity on top of Bitcoin is. This represents an opportunity, though, as DeFi on top of Bitcoin could be one of the biggest things ever to happen in crypto, where Bitcoin isn't just bigger than Ethereum. It's bigger than Ethereum, Solana, and everything else combined. Bitcoin is the largest ecosystem of hodlers, of market cap, of liquidity. And if we were ever able to unlock that activity on top of Bitcoin, this would be one of the biggest things ever to happen. So, what sort of DeFi activity are we talking about? We're talking about lending and borrowing. So you could borrow dollars or USDT using your Bitcoin as collateral. I think that's a very easy, understood use case. And with all the busts that we saw in the lending and borrowing markets, it'd be nice if we could do that in a way where we didn't have counterparty risk. Of course, with protocols, you still have protocol risk, but that's kind of a separate conversation. There's other things, too, that I did not anticipate that I think will be enormous. For example, Babylon. Proof-of-stake chains using Bitcoin as their staked asset. If you were to create a proof-of-stake chain, what better asset to use to stake and protect your chain than Bitcoin? This could be a couple $100 billion of demand for Bitcoin to be used as a proof-of-stake asset on other chains. So I think that's a huge dApp and a huge TVL unlock that people aren't really considering, and I hadn't considered until Babylon came around. 1% sounds about accurate, and I think that represents the opportunity of many other use cases where people would want to lock their Bitcoin, lock it up for proof of stake, or they'd want to borrow against it or lend it out. So I think we're in the very, very early days of that.
I might just add a comment as well that it may be that a lot of people have just been comfortable using centralized versions of things, right? Whether it comes to, let's say borrowing against your coin, whether they are going in America to, let's say, Unchained Capital or to Ledin. I believe they're in Canada, but nevertheless, I think maybe that may be why we don't see as much of, let's say, on-chain, less than 1% of the coins. And even with things like Lightning, as an example, right? There's lots of people there may be many people who have access to Lightning and they are using some kind of custodial provider, whether that's Coinbase, Binance, Kraken, Bitfinex, or Blink, or you name it. But when you boil it down, how many coins are actually, quote unquote, in a Lightning channel? It's like 6,000 Bitcoins or something like that. It's a very small number. So you could, I mean, there's a few ways you could take that, right? You could say, well, maybe it's just capital efficient. Or it could also be that a lot of people don't care that much about using these things in a non-custodial or self-custodial way. They're happy to just, you know, be a custodial user on pick your custodial exchange or wallet provider or wallet of Satoshi or whatever. So it could be that.
Yeah, I agree with all this. I agree that it is a massive opportunity. But at the same side, we need to look at it that this needs to be done on Bitcoin. It's not just an opportunity, and it'd be awesome if it worked out. We need to shift our focus in growing the network side of Bitcoin and not just being like the first question we just discussed about hodling Bitcoin. You know, when Satoshi created and wrote the white paper, he discussed Bitcoin as being a peer-to-peer cash system, not as being a store of value that you just hodl forever. And with that, we need more transaction value changing hands on the network. We need it to be more of a medium of exchange. And these opportunities of building DeFi on Bitcoin, you know, maybe, you know, the idea of using Bitcoin as collateral is, I mean, what better collateral is there in the world, not just in crypto? So I think more use cases are going to come out in the future that is going to continue to build this out, which is going to continue to grow the network effect of Bitcoin, which is going to allow more users to come on board, more developers to develop more applications, and then we can kind of go from there. But I think, yes, it's a great opportunity, but we need to come together as a Bitcoin community and kind of push this forward.
And I think there's something else here that a lot of Bitcoiners don't realize too, is that, you know, Bitcoin is competing against fiat money and also all the other crypto assets out there. And if DeFi activity comes back to Bitcoin, that means that Bitcoin dominance this cycle could go up a lot more than it has in last cycles, where we've seen sort of a downtrend of Bitcoin dominance. Now, the dominance metric is kind of silly because it also includes stable coins. There's thousands of new or millions of new shitcoins being created annually now. So, you know, there's this constant inflation of market cap against Bitcoin's market cap, which causes that decline. But I think long term, we'll see Bitcoin come back and start to eat more into that dominance metric as DeFi absorbs and sucks away these use cases that other chains had explored. For example, NFTs are a prime one, where NFTs started on Bitcoin using Counterparty way back in, was it 2014, 2015? So Bitcoin created NFTs. NFTs started on Bitcoin. Ethereum and Solana popularized them, and now they came back to Bitcoin using ordinals. And ordinals trading volume on some days are larger than Ethereum, which is pretty cool that this activity that started on Bitcoin, got popularized somewhere else, came all the way back. The earliest eras of Bitcoin, the community used to talk about how we would let altcoins be the experimentation or the laboratory to go experiment with new type of ideas. And so this, I think, is a prime example of that, where it started on Bitcoin, the mass experimentation occurred on other chains, and now it's come back to Bitcoin after market validation that people want this thing. I'm not here to tell you that NFTs are art or that you should go buy some, but needless to say, some people want to buy some in a free market system. I think that coming back to Bitcoin is a great thing.
Okay, so coming back a little to Jeremy's answer, and Jeremy mentioned Satoshi and the fact that he saw Bitcoin as a medium of exchange. I think we can even arguably say that, you know, if we cite in some of his writings that he basically envisioned Bitcoin L2s, because at some point he was talking about generalizing Bitcoin, and he did mention the possibility of having separate networks and separate blockchains that share the same CPU with Bitcoin itself. So, Jeremy, you said that we should come together and focus on growing the on-chain component. How do we do that? What's your answer to this, and others as well?
So yeah, when we look at Bitcoin versus other chains right now, most other chains, either they have some type of foundation that's pushing new projects to be built on their network, or you'll see a new L1 pop up backed by a lot of VC money, and they're creating, you know, bounty programs or grant programs to allow users to come in and build out new projects so that they can increase their TVL. And it doesn't matter that these tokens are going to go to zero in 3 years. They're just trying to, cash out. On Bitcoin, we don't have that. We don't have a community base that is pushing the development on Bitcoin. And what we've done with GoMining, and I guess my answer to the question and what we're working on right now, the big launch we have here at Bitcoin Amsterdam, is we've created the GoBTC Foundation, which is bringing like-minded individuals in the space, in the Bitcoin space, that believe in this, this build-out of the network and incubating new sites on Bitcoin, bringing them to market, helping them develop, and then launching them on the network. This could be layer 1, this could be layer 2, this could be DeFi projects, all this stuff. But it's not so much, okay, yeah, we started this. We need to come together as a community and not be divided where, okay, one side of it is saying we need to hodl forever and the number just goes up. Or the other side is saying, okay, let's build these projects. We come together as a community and build out Bitcoin and make it so that it's the only chain that we need. And in as Dan said, everything comes back to Bitcoin eventually. And then what use cases are going to be for all these other chains? There is none.
So speaking of blockers, why are we at this point where we're seeing? The growth isn't the same in terms of dApps and on-chain applications, et cetera, et cetera. It's not the same as on many other L1s. And why do you think we're in this place, and how can this be changed?
I can chime in here. So I think, when you look at a developer's mindset on what they want to go, let's say they don't understand anything about money, right? Like they've never read about Austrian economics. They don't really care about the 2008 financial crisis, and they just want to go build things. They just want to go code. Bitcoin isn't the most usable or fun playground to go build dApps in. So naturally, I can see why they're attracted to other protocols, because you really have to have the combination of both understanding money and understanding computer science and really understand that middle ground as to why you'd like to work and build on Bitcoin. However, there is a third component which I am surprised most developers ignore, which is your total addressable market. Bitcoin has the most number of users. Naturally, if you wanted to go build a dApp or you wanted to think about building a service, you would make sure that it's applicable or usable for Bitcoiners. So for me, that is surprising that a lot of developers don't think about that. So when it comes to why Bitcoin, so that's one component. The other, I think, as well, is funding. On the VC landscape, I forget... was it TVP, Trammell Venture Partners?
Yeah, TVP. They talked about that report.
Yeah, they put together that report where they calculated how much funding went to Bitcoin startups from venture capital, and I think it was less than 2%. That's a combination of Silicon Valley, I think, looking at tokens being a better path to liquidity than equity rounds in startups. They're not wrong, though, because if you look at how many companies have IPO'd in crypto and how many companies have had exits, I've been in this space a super long time now. 12 years. And there's only been a handful of exits that I can recall that were material. So, VCs are incentivized to invest in tokens because those tokens will return liquidity much faster in a market that really hasn't had many exits. Coinbase and a handful of mining companies are the only publicly traded companies in crypto right now in the US stock market. So there's an incentive for them to fund token projects, and most of these Bitcoin companies don't have tokens. And as well, those tokens allow people to, they have so much capital that have been infused, they can take that capital and go throw it at dApps to go build on top of the protocol. And so there's a lot of these developers out there chasing incentives that are given to them through indirectly through VC funding. And a lot of the Bitcoin startups don't have that VC funding to go bootstrap development.
One quick point I might just throw in here. I would say, now Dan's been around a while as well, but I would say be wary about when people get into this mindset of, Bitcoin is not doing well because it doesn't have my chosen technical advancement. Or, in years gone by, cycles gone by, Bitcoin is losing pace because we didn't raise the block size, right? Like that was an argument. That was a thing people used to believe. I think this can happen when people are maybe overly focused on a certain technical thing or a certain technology aspect of Bitcoin, but they're not enough focused on the monetary aspect of Bitcoin. And so I think that's an important, thing to remember, because if you are too focused on a particular technology or technical innovation that you would like, you've got to remember that's not necessarily the same thing as getting monetary adoption. And I think put it this way, I would say the monetary part is more important. And I would say that there have been cases where people try to, let's say, do a startup or try to change Bitcoin in some way without first appreciating that monetary part of it. And then that was where maybe they went into an error because maybe they put in all this money into this idea and it didn't turn out. So I would say, to me, the way I'm seeing it is that there's kind of an order of operations to how this thing goes. And we may not like the pace. We might like it to be faster, but I think there's a certain pace at which Bitcoin adoption is going to happen, and a part of that is people learning about hodling and saving and storing value. Because if you think about one way to think of it, think about the rough size of the market, right? Bitcoin as a market, last I checked, maybe $1.2 trillion, right, as a total market. The market for US Treasuries is maybe 25 or 30 trillion, right? The market for equities is probably 2 or 3 or 4x that. So until Bitcoin gets to a certain size, it may just be that there's a lot of people who they mainly want to hodl, and we can't sort of berate them into spending their coins or borrowing against their coins because maybe that's just not interesting to them yet. So I would just make that caution. That's all.
And to piggyback off of that, when we look at protocols or products, do they have market fit? This is called protocol market fit or product market fit in classic product talk. Bitcoin's product market fit is it has 3 different values, right? It's censorship resistant, so you could buy things that are illegal because no one can stop the payment, or you could just move money, legally, whatever way you like, but there's no way to censor it. It has the most credible monetary policy on the planet. It's even a more credible monetary policy than gold because we don't know how much gold exists or how much gold will exist versus 21 million BTC. And due to, if you secure your private keys correctly, it's an extremely hard to seize asset. Those properties are most characteristic of like a new store value asset. And that's how most people in Bitcoin have used Bitcoin, is they're storing value in it. So instead of, and this is a classic problem as a product builder, is sometimes you extrapolate your own desires onto your users. And that's where we've seen thousands of dead payments startups in crypto. I mean, in the 12 years I've been in, literally over 1,000 dead startups trying to push payments, merchant payments, those sort of things onto users versus being empathetic, zooming out and going, what do my users actually want? And what we've seen that they want is a store of value asset. And that's almost entirely of the adoption so far and how people use Bitcoin so far. So when it comes to DeFi or dApps, I hold the same philosophy. We could extrapolate and push this on them, but actually what do they want to see? And we do see some of this over on Ethereum and Solana, where on Ethereum, lending and borrowing is extremely popular. We've seen other types of activity over there be extremely popular. And so, I hypothesize that holders of Bitcoin would also want to do those things with their Bitcoin as they do with their Solana and Ethereum. But that is a hypothesis. However, I try to be as empathetic as I can with what do these people want to do versus me extrapolating what they want to do.
So you mentioned the technological aspect, the monetary aspect. I wonder if we can talk about the socio-cultural aspect as well. Because if we take projects like Taproot Wizards, Udi, one of their leaders, he's been vocal about dealing not necessarily with technological limitations, but with cultural ones. And basically the community not being ready to accept new ideas. Do you feel like it's a big one as well when it comes to growth on Bitcoin?
Well, I am biased, so I'm not sure who should answer first. Should it be Stephan or myself?
You go, yeah.
I'll go first. I'm an advisor to Taproot Wizards, so a little bit biased here. I think a lot of people would find Udi's techniques controversial with how he's gotten attention around OPCat and some of the things he wants to say about Bitcoin development. Directionally, I don't think he's wrong that there has been some stagnation in terms of the conversation. I'm not necessarily saying that Bitcoin's code has stagnated, but I think the process of even talking about BIPs on Bitcoin has somewhat stagnated or become a little so convoluted that there's not a productive conversation. Again, I'm not saying that Bitcoin's broken, nor do I think that Bitcoin has to change, but I do think the process of having that conversation had been a little bit has sort of degraded over time. What is interesting and what I think needs to be resolved here, and so while Udi highlights OPCAT as the solution, I think there are multiple solutions. The scaling debate, the outcome of that is the community, we all decided that Bitcoin would scale in layers, that not all the activity could happen on the Bitcoin base layer, that activity had to happen on L2s, Lightning, Liquid, whatever sort of L2 you'd like. The problem is these L2s, other than Lightning, are somewhat insecure. Liquid is a federated model, which is basically a slang for a multisig, which multisigs aren't the greatest game theoretic security. With OPCAT or other type of updates or implementations on Bitcoin, we could have trustless bridging. And I think trustless bridging fulfills that social contract that we had where if we want to have L2s, we should have trustless bridges to those L2s. Because if we want this whole blossoming Bitcoin economy to occur on these L2s, we have to make sure that they're rooted and anchored into Bitcoin L1. So I do think that's an unresolved question that I think does have social consensus over how we all agreed to scale Bitcoin, but technically that hasn't been solved yet. So I don't know if OPCAT is that or something else, but that's how I view the conversation. And so I do find Udi's, while a controversial method, I do find it useful to push that conversation forward. But yeah, I'll hand it over to Stephan.
Yeah, sure. So my thought on it is, I'll be honest, I'm not really a big fan of NFTs, but look, to be fair, I also recognize there are certain forms of things that I might call them spam. I can't necessarily stop them. So I'm not quite a filter bro myself on that particular topic, but I'm also not I'm not in favor of like going and doing NFTs or whatever. To the conversation around what way should Bitcoin advance, I think it's probably fair to say a lot of the conversation gets sucked into things like scaling and what's the next soft fork? Is it OpCat? Is it L-enhance? Is it great script restoration? Is it TX hash, or is it some other idea? I think that's perhaps some of the conversations of those conversations were just really right out there in terms of social media conversations. Whereas other, let's say, big projects within Bitcoin Core were not necessarily being publicized to that level, or maybe they weren't being argued about in the online debate sphere, let's say, right? Things like UTXO or ASMAP or Assume UTXO. And some of these projects have just been ticking along in the background. They're just going along, and some of them, in the recent Bitcoin Core version 28 release had ASMAP and Assume UTXO. So there has been progress on some of these let's say, controversial scaling topics. And maybe it was just about the method being employed for some of these, and that maybe were those conversations to be had in, let's say, GitHub, in the email threads, as in the Bitcoin developer email threads, it might have been a different conversation compared to becoming sort of a hotly charged online debate about what's the next soft fork, and why is it taking so long, or whatever argument people are having. So I think, let me summarize that. I think it might be the format and the methods that have been used that may have driven a different outcome. It could be that. It could just be that simple.
Before we wrap up, Jeremy, your quick thoughts on keeping an open mind when it comes to Bitcoin?
Again?
Yeah. So I just wanted to hear a perspective on keeping an open mind when it comes to developing on Bitcoin.
Yeah, I'm not going to try to be an expert when it comes to what changes should be made to the Bitcoin protocol, or what projects are going to win in the end. I just believe that, and we believe that we need to continue to move in that direction. We need to continue to help more developers build and more projects to come online. And for us, we look at it, not just as Bitcoin on the store of value side, but we look at it as Bitcoin miners. We look at that, 5-10 years down the road, how are we going to stay profitable if there's not going to be transaction fees to keep us incentivized? Because the reason why Bitcoin right now is considered the largest, most secure network in the world is not because everybody's hodling. It's because of the Bitcoin miners who are securing the network on a daily basis. And if the Bitcoin miners aren't kept happy, things are going to change. So one side of it, we look at it as we need to continue to build out Bitcoin because that's what's best for Bitcoin, that's what's best for the network and for network effects. But on the other side, that's going to keep Bitcoin more secure over time as well, because the miners are going to stay happy.
Thank you. So before we wrap up, a quick reminder, tomorrow we host an pitch day here at this stage at 10 a.m. Dan's going to be there, Jeremy's going to be there, Stefan, we're also waiting for you. So if you're building on Bitcoin, you definitely don't want to miss it. So yeah, thank you everyone.
Thank you.
Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.